Hi there, this is Shanil. Welcome to the second episode of this season, in which we are going to discuss mainly about real estate and real estate funds. As I mentioned in my last episode, we're going to debunk some industry myths in financial advisory. Alright, first of all, let's see why on earth would you need the help of a financial advisor? Here are key points to see if you need the help of a financial advisor. Number one, you are earning a handsome amount from your current work and you don't have enough time to invest by yourself. Number two, you went through a major life event. And number three, you have time, yet you still don't want to learn and do investing by yourself. There are many pros and cons to hiring a financial advisor. Let's hear from my good friend how he got started and how he got his inspiration from his grandfather.
Welcome to Cashflow Formula, insights into the world of investing, and learn how to build wealth through cashflow, simplifying the complicated world of alternative investments for you. If you like what you are hearing and want to learn more, consider subscribing to the show wherever you listen to it. Here's your host, Shanil, founder of SNW Investments.
Yeah. So for listeners of the show, my name is Rob Cook. I am a financial advisor, real estate advisor, I guess you could say, and podcast host. But I haven't always been that way. To Shanil's point, I grew up in a family that was very entrepreneurial, invested in real estate, was just constantly trying to be our best, trying to grow. And I grew up in a really strong family. My grandfather was an entrepreneur, like you mentioned, started a family business, grew it, was very, very successful. But at the end of the day, it was never about his success. It was never about making a lot of money for him. At the end of the day, he always included us in family stuff. He always brought us around. He was showing us how to be a great man. He did lots of acts for other people that he never told anyone about. He didn't live in an age of social media where it was like, hey, check me out as I'm doing X, Y, and Z. He just went and did it. And then we'd hear about it later. Or he would use his success to help others in other ways, or he would bless our family by giving us opportunities and experiences that we wouldn't have had in other ways. Okay, like for example, here's one. When I turned 18 years old, or 19 years old, I left on a mission for my church. And when I was going to leave, I was going to go to Houston, Texas. Very, very exciting. I'm from California, for those listening. And when I was about to leave, my grandfather took me by the hand, and he had a $100 bill in his hand when he shook my hand. And I looked at him like, what are you doing? And he put his hand on my shoulder, and he pulled me in real close, and he whispered in my ear, and he said, Rob, this money is not for you. It's for someone else, and you'll know when you find them. And I thought, okay. Because he could tell by looking in my eyes like, oh, is this $100 for me? Cool. As I'm leaving. No, this money is not for you, right? It's for someone else. So he gave me that $100. I carried it in my wallet for almost 2 years. And then at 23 months out, I found a family that was in need of it. And it was like, immediately I knew this is for them. And I gave it to them and I had an incredible experience giving it to them. But either way, the point, it was only $100. But it was $100 that impacted that family's life. And it actually really changed that moment in their life as well. But it taught me a huge lesson that money isn't the end all be all. You don't just have money to just give it out, but it's to make an impact, make a difference. So he gave me $100 to give to someone else. And in turn, I wound up having an experience where I was able to bless someone's life because of it. And it showed me the true value of money. Yeah, money can buy us goods and services, but at the end of the day, it's a tool to be used to bless our lives and the lives of our families. And if we lose sight of that, we lose sight of its entire purpose. And it just becomes this inanimate object that we're constantly chasing and never having enough of. Yeah. So that's a little bit about me, my background, and kind of a little bit about what I do.
With that being said, let me emphasize the fact that money is a commodity which must be used as a tool to enrich our lives and the others. Let me tell you why I am a big proponent of personal development. If you want to be successful, you have to get better yourself. Period.
You can't become a great manager or CEO of a company unless you improve your ability to lead. Period. You can't become a great real estate investor in any particular asset class until you educate yourself. If you don't, you're just going to be flying by the seat of your pants and rolling the dice in every deal you come across. And that is no way to invest, right? You can't become a great athlete unless you put in the time and learn your skill, your craft, your sport, however you want to describe it, right? All progress, all success, all triumphs come as a result of personal development, I'd say. And I'd say it's personal development for the benefit of others more often than not. It's with that higher purpose that it then gives you the added boost to continue on beyond just the initial burst of excitement that you get on a new thing. But yeah, I'd say that right there is the biggest reason why personal development is so important, because no real meaningful impact or progress will be made in your life or the life of your family unless you get better yourself.
Well, let's say you are a busy professional and you are great at what you do and you love it. So you're planning to hire a financial planner. I'm sure you want to know how a financial planner would approach your situation. Here's Rob again.
Investing, like from my perspective, for me, my job every day, I view it as a duty to see the big picture. I have the blessing of having a lot of deep knowledge in different areas because of my CPA and CFP background. But at the end of the day, all investing is kind of twofold. There's the high level overview, the trends, the maintaining the big picture for the purpose of everything that you do. And then there's the details, the due diligence of every single piece. Whether you're talking the due diligence of a traditional portfolio of stocks, bonds, ETFs, mutual funds, whatever, or the due diligence on a real estate deal, or the due diligence on a syndication, or whatever it might be, you start high level and you go lower from there. So I have found that more often than not, as real estate investors, as investors in general, we tend to get lost in the weeds, focused on the deal, hunting the deal down, and we lose sight of the big picture. We lose sight of the purpose for everything that we do, and we lose sight of the investment within the overall confines of our wealth that we're either trying to create or we have created at this point. And I try every single day to help people keep that perspective. I have my specific areas where I help clients in terms of investing, but at the same time, I try to help us not lose sight of the big picture. I think if we lose sight of the big picture, why do we do what we do? Why do we invest in real estate? Why are we trying to get more doors? Why are we trying to do any of these things? And if you can't answer that question, then we need to step back and reevaluate what we're doing.
As he just explained, he would approach it top to down. How about this? How many of your questions that you are about to go and ask your financial advisor are really facts? So let me save you time right there. Here's Rob breaking down some of the misconceptions that he had dealt with over the time.
I can take this honestly a host of different ways, but the first one that popped in my mind is I often laugh at the people who think that they are real estate investors who are not. I work, like I've mentioned a couple times, I work as a wealth advisor during the day. So traditionally people, when they think of investing, they think of stocks, bonds, mutual funds, ETFs, their 401ks, their superannuations, whatever it is that you use to invest more often than not, right? But people also know that real estate's a fantastic investment opportunity. So you'll see these people who have very little experience in real estate who just go, hey, I found a great deal. I'm just going to go buy it. You go, okay, great. Awesome. Let's run the numbers on it, right? Because every real estate transaction should have some due diligence behind it. And I can't tell you how many people who are like, oh, I went and bought this single family home. It's awesome. It cash flows just enough to cover the mortgage. And I'm like, okay. That's a great start, but how much more than just the mortgage? Have you accounted for vacancy? Have you accounted for repairs and maintenance? Have you accounted for, we walk through the list, right? And more often than not, the answer is, oh yeah, I didn't think about that. Oh, that's really smart. Should I do that? You're like, come on, man.
Well, you should be.
You're calling yourself a real estate investor here and you haven't thought about this all the way through. I love real estate and I think it's a fantastic investment tool, just like any other investment tool out there, but it must be used properly, right? And one of the biggest misconceptions is people think that they're real estate investors when they're not. Going back to this personal development idea, they haven't educated themselves enough on the asset class. They read one or two things and they think they know everything that they need to know. They don't understand what it's like to actually be a landlord if they're going to manage it themselves. They don't understand the level of due diligence that you should likely go through. They haven't actually run the numbers. They just did the high level, heat check and, oh yeah, we're good. And that's it. And that you can't do that in real estate. You really have to understand your asset and the asset class and the trends to be able to make a good real estate investment. And so that I'd say that's the biggest misconception that I see more often than not.
Now that you know what misconceptions are out there and how to tackle them, let's say why on earth you need to consider real estate in your portfolio.
And it really depends, because I feel like I like real estate because I'm familiar with it. And I feel like for a lot of investors, you should invest in places where you are familiar with the asset class. People think of risk more often than not in my profession in terms of how much is your stuff moving up and down, right? They call it volatility. But volatility is not actually risk. Risk is how likely are you to lose your money? And the number one indicator of whether or not you're going to lose your money is actually how much you understand the investment that you're making, right? An investor who invests in, let's say you have two investors, right? One of them has been investing in the stock market for 30 years, and one of them has never invested a dime in the stock market. Well, you could put them both in the same portfolio that the one investor who's been invested for 30 years will look at it and go, this sucker's hardly moving, but it's moving 15% up and down, potentially each year. The other investor might think that he's losing his shirt when it's moving 15% and he can't believe it, right? Because he is not comfortable with that asset class. He doesn't understand his own investment. And the same thing happens in real estate, right? How many of us have come across real estate investors who didn't quite understand, and they jump in, they buy a house, and all of a sudden crap hits the fan, and they say, well, it's because I had a horrible tenant. Oh, it's because they start blaming everybody else, and they don't realize, well, dude, it's on you, dude, gal. I mean, it's your job. You are the investor. First and foremost, your job is to become educated on that asset class, to understand it, and become comfortable with it to the point where you can make educated, well-informed decisions about the investment. So I like real estate because I am familiar with it, because I have taken a lot of time to educate myself on it and invest in it. Whereas, gold coins might be a really great alternative asset class. I just don't know it super well, so I'll probably use a different vehicle to do so if I wanted to diversify that way. Or merger arbitrage is another quote-unquote alternative asset class that you could invest in. Private equity or hedge funds that do merger arbitrage. Do I understand merger arbitrage?
All right. Let me explain what a merger arbitrage is and how hedge funds have made billions using this strategy in simple terms. Let's imagine this hypothetical scenario where company A share price is at 20 and company B makes a bid at $30 to acquire company A. Now there could be two scenarios. Company A shareholders won't like the proposed bid and reject the offer, and the acquirer may come up with a higher bid, let's say $32. Then the other scenario is that outside investors assume that the deal won't go through and they bid less than $30 for company A. Depending on these two scenarios, market price for company A changes the next day at the opening. Let's take the scenario where company A share price is at $27. This is where the merger arbitrage guys come in and buy those shares at $27 from the investors. Why? Because they know something that the market does not know. So they buy them at $27, and once the deal goes through, they make $3 per share. That's a bit about merger arbitrages. Now let's get back to the rope.
Beyond just a very general high level? No. So am I going to put a lot of money there? No. Right? That is wise investing. You do not invest in asset classes you do not understand with substantial amounts of money. Maybe little bits and pieces so you can kind of test the waters and learn it as you go. That's fine. But large chunks of money should never be in an asset class that you do not understand fully. Period.
All right. Now that you